Hey guys, welcome back. In today's video, I'll be showing you guys how I use the higher time frame setups to determine my scalping entries on a lower time frame. On the hourly chart, we can see that price has made a downward move and huge bullish displacement here initiated by smart money, consolidated a little poke towards the upside before traveling down. We can see as well that there was a fair value gap that has formed here. We've got a buy side liquidity there and our sell side liquidity here. So with these annotations on the chart, we can see that price moved up, consolidated a little bit, poked through, swept liquidity and the buy stops, encroached into this fair value gap before price started to move down. Moving on to our 15-minute time frame, we can also see as well was a buy side liquidity here and another one there. So with that in mind, we can see that price on the 15-minute chart has consolidated here. We can see it in more detail, made an upward trend before moving up to our 1 hour fair value gap and created a wick above our 15-minute buy side liquidity before traveling down with huge energetic candles. So with that in mind, we can also see with that movement downwards, it has actually created a market structure shift. Why? Look here, consolidated upward trend, pushed up, rated liquidity, big bearish candles towards the downside, breaking the market structure here. So with that occurring on the 15-minute time frame, I'm looking for price to possibly be drawn towards the 1 hour sell side liquidity here. Once we move down to our 5-minute chart, this was the time frame where I executed my trade. I executed it around here. I placed my stop loss there above the high there, and my take profit was around here. So it was a 1 to 2.5 risk to reward trade. Why did I specifically take it here? I noticed on the 5-minute time frame there was also buy side liquidity that was sitting there. We can see price traveled down, made its way up here 2 weeks before 3 huge bearish candles coming downwards initiated by smart money. I also noticed there was a fair value gap that has formed here. Also, if we take our fib and plot it from our swing high to swing low, we can see that price actually encroached into our 61.8% mark. So that means it's actually trading at a premium because it's above that 50% mark. So I executed my trade here because I waited for that pattern to form first before execution. I took my full position off here. I was trailing my stop loss and taking partial profits along the way. We can see that price eventually made its way down to the 1 hour sell side liquidity, but I decided to take my full trade off because I was just following my trading plan. So trade according to your trading plan, not your emotions. I hope you guys found this video helpful. Like and subscribe if you guys like this kind of content. Drop a comment below as well if you guys have any questions. Thanks for watching. I'll catch you at the next one.